Hello and welcome to UBP. 5 years ago, our clients often asked us why we thought an allocation to Chinese domestic equities made sense alongside Hong Kong or US-listed Chinese equities. Now they share the belief that diversifying with domestic Chinese A shares can also reduce the overall portfolio risk. The major hurdle investing in China is the high retail investor participation and the emotions that come with it. But today China seems to be maintaining its growth trajectory despite the disruptions caused by the trade conflict and the pandemic. Most participants in the China A share market are retail-focused and sentiment-driven. This leads to mispricing opportunities, which can be accessed with actively management using implied volatility calculation to forecast stocks' behavior. Most of China's indices have decent exposure to state-owned sectors like heavy industry or big banks, but where the future of Chinese economy lies is among the winners of the new economy. These opportunities are too often missed by passive vehicles, whereas active managers can more systematically handpick the companies that have the most attractive risk-return profile. When we select stocks, we use different quantitative tools, but we also use the latest developments in machine learning. Applying machine learning models takes the emotion out of investing and focuses on market volatility. This is important in a market dominated by retail investors, they make up over 80%, and government intervention. With our model, we systematically identify strong performance in different market cycles and adjust and learn from the past hit ratio. China's GDP growth is going to shrink, but remain in positive territory. Thanks to government support and the fact Chinese companies are investing more in R&D, domestic consumers are among the first to be back in stores, mostly e-stores, especially food delivery and online education. The most important thing to remember when investing in A shares is the emotion carried by significant retail participation. This is why we think we can benefit from our thorough understanding and forecasting of future volatility. But it requires experience and a specialist know-how. Domestic Chinese shares, beyond their inclusion in most relevant indices, is the best gateway to a strong labor force that is becoming better educated and richer. This provides investors with unique access to the latest development taking place in China across most sectors of the new economy. For more information, please visit ubp.com or contact us. Thank you.